A better than expected jobs report for the Canadian economy in the month of December. Let's break down those numbers. More than 35,000 jobs added in Canada in the month of December. The expectation on Bay Street was that we were going to see positive job growth, but around 25,000. So again, 35,000.2 to be exact jobs created in the month of December. That is above expectations by about 10,000. And remember, that's a stark contrast to what we saw in November when more than 70,000 jobs were shed. So all told, after 285,000 jobs created in the first 11 months of the year, you're talking about more than 200,000 jobs created for Canada's economy in 2019. Other points to get to, the unemployment rate coming in at 5.6%. That is noticeably lower than what was expected on Bay Street. The survey was calling amongst the economists that Bloomberg tracks for 5.8%, and in the previous month it was 5.9%. So that unemployment rate continuing to decline, as well as we mentioned, 35,200 jobs created. And on wage growth, this is kind of an interesting number. We saw a deterioration there. We still saw noticeable increases in wages, permanent hourly wages up 3.8% year over year. But the expectation that we were going to see a stronger number, about 4.2%. And in recent months, it had been staying in that 4+% range, in part because when you've got a lot of employment, and we're seeing that in the unemployment rate right now, generally speaking, that puts a little pressure on employers. Just breaking it down here a little bit, full-time jobs represented 38,000 jobs being created during the month. In other words, there wasn't any part-time employment being created, only subtracted more than 3,000 down, and you add the math together, and that talks about 35,200 jobs created, and the loonie surging to a high of the morning on that strong data. I'm going to bring in Eric Lascelles in just a second to get his reaction, but I do really quickly just want to let you know the U.S. jobs numbers, because we got those as well, and there we saw 145,000 jobs created. That was below consensus at 160,000. So we'll go through that with Eric now. But first, let's get your reaction. Eric Lascelles of RBC Global Asset Management joining us here to a stronger than expected end to 2019.
Right. I mean, certainly we'll take it, as you mentioned, in the context of that prior month of not job creation, but rather extreme job losses, the minus 71,000 in November. You may recall October also had a very slight decline. So we were running on a bit of a trend of job losses in Canada. I don't think anyone honestly thought the Canadian economy was weak enough to sustain that indefinitely, and I suppose this is the proof of that, in the sense that here we are back in positive territory. But as you said, more positive, I think, than many of us would have expected. An extra 10,000 jobs on top of the 25K consensus. That unemployment rate back down to 5.6%. Do note it was as low as 5.5 at one point, so we're still clawing back losses both on the job creation and the unemployment side. And you know, I wouldn't look too negatively at the wage side. Granted, a little bit less wage growth year over year than before, but let's appreciate in the context of the last decade, high threes is still a good rate of annual wage growth. And in fact, I think many of us were even a little bit suspicious of that 4% number, in the sense that you pivot toward the U.S. and you see broadly a similar looking labor market. It wasn't quite pulling off the fours.
I guess it's just that you would hope that at this stage in the employment cycle that wages are going up. I mean, there was a great conversation earlier this morning around the lack of productivity in this country, and you certainly would like to see substantial wage growth. I just want to go through some of the numbers in more detail. If you're just joining us, more than 35,000 jobs created for the Canadian economy in the final month of the year. That was above consensus by 10,000 jobs. The private sector reversed course, nearly 57,000 job increases there, offsetting a decline of a similar size in November, while public sector employment was down during the month. It was down more than 21,000 positions. If we look at the provincial breakdown, employment gains in December were led by Ontario and Quebec, while BC led the declines. Just looking for the year overall, employment increase for both young men and women, and for men aged 25 to 54 and 55 and older. And for the year overall, services producing jobs were up about 367,000 versus a decline of 47,000 for the year overall in goods producing industries. I'm joined by Eric Lascelles of RBC Global Asset Management as we take a look at this jobs picture. And all told, I'm just looking at the all-in numbers here for the year. This brings the total number of jobs created in Canada in 2019 to more than 320,000 positions. That is the second most since 2007.
Gosh, we have had quite a run over the last few years, really, and so a bit of stumbling clearly toward the latter part of this year, a nice little recovery at the end, but you're absolutely right in suggesting on an annual basis, 2019 was a good year for Canadian hiring. I think you surfaced a few other interesting things as well. One would be productivity growth has been pretty dismal, and so for those who don't know, the math really is that an economy grows either from more workers or more productive workers, and so to the extent we've had good hiring for the year, but not particularly impressive economic growth. Really, what that means is we've had almost no productivity growth, and so that's very much a concern. And I'll say more broadly, we are a little worried about Canadian competitiveness at this point in time. No discussion of employment would be complete without an acknowledgement of the volatility inherent in this series. So we get big ups and big downs, and sometimes we need to smooth it a little bit. But as you said, on an annual basis, we've ultimately had a pretty good year.
Well, you're getting into something that I'm sure viewers are going to be curious about, especially since they're tracking the Canadian dollar this morning, which was moving higher against the U.S. dollar. Disappointing jobs report there, and we'll get to more on that in just a second. But if you think about the trend that we saw in reaction to the previous jobs numbers, they were lousy, and you basically saw sort of a negative trend for October and November. Now you've got this sample size, final quarter of 2019. How do you think policymakers are going to look at this? Because we've said a million times here that the Bank of Canada opted to stay on the sidelines with rate cuts last year. Then you started to have some disappointing numbers into the end of 2019, raising questions about what the Bank of Canada would do this year. And now we have a pretty rosy number to end the year.
We sure do. And so I think there's relief there in the sense that this would seem to at least partially vindicate that steady stance they've taken versus the cuts elsewhere. I wouldn't say that story is done, though. And so part of the narrative would be, let's be aware as we're tracking Q4 GDP growth for Canada, it's tracking basically zero right now. We're actually not seeing much evidence of economic growth and naturally lots of conflicting signals in there. But I would still say the Canadian economy is running at a little bit of an underwhelming pace despite what has been some good job creation. And again, you pinpoint bad productivity growth as being the reason that's happened.
Yeah, I do want to get to that U.S. story because obviously those who are watching the markets are going to be watching that story. It'll no doubt be a factor with U.S. stocks today. So the U.S. jobs market ending the year with less momentum. We saw 145,000 jobs created. There had already been a downward revision there was a downward revision for the prior month to 256,000 jobs. So the 145,000 jobs created for the U.S. in December was below the estimate, 160,000 jobs to be created there. And then average hourly earnings came in below forecast. It was 2.9%. So that's the first below 3% reading since 2018. And, speaking of wage growth, what does that mean for the U.S. economy as we start the new year?
Right. I mean, that is a disappointing number. That wage growth one is the one that captures my attention. The job growth, a little less than expected, certainly less than last month. But in contrast to Canada, last month was probably unsustainably good. So that doesn't fret me too much. But the wage growth is underwhelming. And let's acknowledge there are some distortions in here. This is the average economy-wide wage growth. And so to the extent you've got 65-year-olds retiring in disproportionate numbers, maybe with high wages, and 22-year-olds coming in and earning low wages, that's not the wage growth the average person would see. The average person is becoming more senior and gaining skills and so on. But the fact remains that's always been the way this is defined, and we're just not seeing a lot. And I think most economists would acknowledge that relationship between a tight labor market and inflation probably isn't quite as strong as it once was. And it's creating all sorts of debates around just what central banks need to do. And it's one of the reasons they feel comfortable for the most part in having very low rates. It's just inflation doesn't present the threat it once presented.
All right, so that's the U.S. story. Before we go, Eric, I just want to circle back on the Canadian story. I didn't break down different industries in great detail, but just to go through some of those numbers, and if you're just joining us, more than 35,000 jobs created for the Canadian economy in the final month of 2019. That was well ahead of consensus, and the Canadian dollar is rallying on that news. Goods producing jobs created more than 15,000 new positions. The construction industry seemed busy at the end of the year, 17,000 new jobs there. Obviously, there have been concerns about manufacturing, which had shed a sizable number of jobs in October and November. There was some job creation there, about 3,500 positions. Service producing, again, that was a weak spot in November, but 19,000 plus jobs created in the final month of the year. Accommodation and food gains of nearly 25,000. And Eric, I started by talking about employed versus self-employed. A lot of employment during the month. Self-employed, not too much change there. Does it suggest that we're kind of at a point in the cycle where employers have enough demand for their businesses that they do have to go out there and bring a few people on board?
I think that's been the story for a while now. Yeah, this is very tight labor markets in both the U.S. and Canada. It's easy to lose sight when we dig into the details of one particular report, but absolutely, these are fundamentally tight labor markets. They've been in that vicinity, frankly, for a year or two at this juncture, and that means that the pressure is on employers more than it is on employees, and they're the ones scrambling to find high-quality workers. And again, a bit of a mystery that we haven't gotten more wage growth out of that, I'll certainly grant, but it's a good position to be in as a worker right now. And as you note, this month in particular was a strong one for the goods sector, but in general, the service sector has been the heroic one in Canada in a recent sense, but also in a multi-decadal sense as service sectors have grown. The one thing I'll say from a regional perspective, you mentioned earlier, BC had the worst, Ontario, Quebec the best. Not wanting to read too much into 1 month, but we run our own economic proxies for the provinces that you can't get from Stats Canada, and we do have Western Canada moving quite slowly economically, and so that's consistent with what we're getting here. Everybody knows the Alberta-Saskatchewan story in the context of petroleum challenges. BC, though, we have also moving quite slowly, and what do you know, there's less job creation there, and so something that was an engine as of a few years ago is seemingly a little bit less of an engine right now.
Yeah, BC shedding more than 7,500 jobs, Ontario creating 25,000, Quebec 21,000, so lots to chew on with this final report of 2019. Eric, thanks as always for helping us break it down.
My pleasure.
Eric Lascelles, Chief Economist at RBC Global Asset Management, joining us with that breaking news on the Canadian jobs front. We do want to get to some of the other top stories we're tracking in the BNN Bloomberg newsroom.